Now, I just wanted to, so this is very much a macro season. You had obviously the US Fed's decision to cut rate and their commentary afterwards, which really roiled markets worldwide, including here. What is your take on that? And what do you think that the Indian central bank should do?
So, well, obviously, I think, as you rightly said, the world is going through a lot of macroeconomic changes. I think the central banks have been quite busy over the last 4 or 5 days. We had action coming from Fed, Bank of England kept the rates the same. We had Bank of Japan making some announcements. Our view is obviously the world economy in many ways is driven by what is happening in the US, and people are anticipating and trying to project what could happen in a Trump regime. Some of the signs are visible, but some of them are not very clear. But what does appear is that they will use tariffs as a major weapon to so-called get countries in line. He's been quite active on social media and in some interviews talking about tariffs across the world so that he can shift more of the manufacturing to US. And that will have some impact, obviously, on the currency. So all the global currencies have been depreciating against the dollar. We have seen that in India. You will also see, while people are talking about the fact that initially it could benefit US, but over a long period of time it could actually have a negative impact on US, all this tariff regime which he's talking about. Trump has a 4-year term. I think he has something to prove. In my mind, the first 6 to 9 months could be quite rocky, and then hopefully over a period of time it will settle down. For India, it basically means that our currency will remain under pressure to some extent, which also means that RBI is now faced with a couple of issues. One, what to do with the currency, and obviously Indian politics does not like a rapid depreciation of the currency. They would like it to keep it steady, and you have seen RBI intervening in the market to kind of keep it steady decline rather than a rapid decline. We obviously have inflation, and so RBI has to take some actions in that direction, and there is pressure building up that interest rates should be cut. Some politicians have gone public and talked about interest rates being cut. Liquidity is an issue, so deposit growth is slow, credit growth has slowed down. And you have to balance all of this to ensure that we keep chugging along at the GDP growth rates that are expected of us. Because at the end of the day, the government in power does want it to appear and the public at large to feel that things are progressing in the right direction. And any slowdown in credit growth or any slowdown in GDP will reflect very quickly in the economy, and obviously that's not good for the government in power. So I think they have a balancing act to do. They have managed it quite well till now, but some of the external macros are not necessarily helping. Just yesterday, Mr. Putin talked about his willingness to do a deal, and oil prices fell. Good for India. But the macro is changing so rapidly that you're literally reacting to it as things are playing out rather than being able to plan really long term. You hope that Mr. Trump will go after some countries, but then suddenly a tweet comes which says, no, I intend to go after India also. So, it is what it is. I mean, it is what the world is looking like. I mean, Europe looks weak for sure. US looks much stronger. Asia is looking at US with bated breath and really trying to see as to where this could land. A lot of the other Asian countries are hoping it only lands on China, but I don't think that will necessarily happen. That it will only will be with China. And I think Mr. Trump at the end of the day does like deal making, right? So it's like escalate and de-escalate is the strategy, is my view. Right. So I think we'll escalate it to a point and then maybe de-escalate into a deal. And people have seen him in the past, so they're hoping that maybe we will see the same Mr. Trump this time around. I'm sure he'll be wiser this time, but let's see how this plays out. Very, very difficult to predict. Overall impact on India, the volatility is never a good thing. So I would say, kind of in the short term, it could be a bit of a negative, but I think over a period of time, all of us will learn how to manage this new equation.
So it might be great fun for the news media, perhaps less fun for policymakers or for people like you, who's running a major bank. Let me just ask you one follow-up to that. The US Fed indicated that the interest rate cuts will be a shallow cut regime, right? I mean, it's 2 cuts now as predicted 4. I mean, that was the thing which really spooked the markets. Again, just to come back to India, do you think the Indian central bank will also follow a similar, I mean, you can't speak for them, but to the extent that you are able to sort of, figure out what might happen, do you think India will also probably cut rates sometime in the coming year, but it might also be quite a shallow interest rate cut regime?
So our economists have been saying it for quite some time that the rising trade deficit and general deficit in US does not allow them and they should not be looking at rate cuts. They cannot afford those rate cuts. And so I guess our economists are kind of patting themselves on the back that I think they're realizing that this rapid pace of rate cuts they were talking about is now actually not going to play out. I think they've been saying the same thing about India, that can really India afford a rate cut today?
Right.
RBI by law is supposed to manage inflation within a certain range. We have not come close to that number.
Absolutely.
Okay, we'll win that range, but at the end of the day, RBI does need to manage inflation down. That has not happened. Secondly, I'm not sure, as a banker, that reducing the interest rates by 25, 50 basis points is really going to spur the economy. It might be a feel-good factor, but is it really going to impact the decisions which people are taking, which could spur the economy? I don't think so. I don't think it's changing business case in a very significant manner. My view is that the capex is expected to pick up. It should pick up. And I don't think they are delaying their capex or waiting to kind of press the green button, waiting for this interest rate cut, is my view. But yes.
You don't think that it's so decisive for capex?
I don't think interest rate cut is going to spur the capex on.
Right,
I think interest rates are pretty decent by Indian standards.
Sure.
It's not that people are saying that, oh, they're really hurting our business case in a big way. So my view is that yes, I fully understand why there's been some noise about the fact that interest rates should be cut, because a lot of economies around the world are talking about interest rate cuts or have cut, and they want India to do the same. But I don't know what the real benefits of that cut would be, because end of the day, your problem on inflation is still not solved. And I think there are other issues which do need to be looked at more closely rather than just doing interest rate cut. I think liquidity needs to be released in the banking system. RBI did that to some extent in the latest monetary policy announcement. Deposit growth needs to come back, because of that can only spur the credit growth and so on and so forth. I think RBI rightly has tightened a number of areas on the banking side. In some cases, the tightening has gone to a point maybe where the flow of credit has reduced quite a bit. And I'm sure, our regulator is extremely smart regulator. They know exactly what's going on. I'm sure they are fully aware of what I'm saying and something even beyond that. So.
Right.